speaking from both sides of the table here.
Yep.
Got a residential, and a commercial side.
Yep.
So one of the things we were just kind of pondering on is there correlation between the two, the ups and downs of the market?
Mm-hmm.
Do they have any impact on each other? I'll kick it to you first.
Yeah. Do they fluctuate in a trend? Do they follow each other one way or another? So I think we were talking about, obviously we've seen an uptick in the single family market, in the residential market. So will that stay the same? Will the commercial market, where does that look like right now? And how does that compare to in recent history in the bubble, the housing recession, and what was commercial doing in that same time frame? So speaking to that, in 2008, that was essentially the nearing the bottom of the housing bubble, housing crisis, if you will, and starting the Great Recession. Now, at that point, it took about 2 years for the commercial market to really get an effect. And then in upswing, the commercial market since 2010, 2011, 12, it's been on a run for at least a 10-year period of increased occupancies, decreasing vacancies, and pricing increases and rent growth that was going to change whether we had a health crisis or a pandemic or not. There was already a projection that the commercial market was going to stabilize and go on a downward trend. So comparing that to the residential side, where it's...
Well, people have been screaming that prices are too high, and the residential side too for a long time. So, but I think fundamentally, you get away from people's feelings about the market. There's always some correlation, right? I mean, we saw the housing crisis. Mm-hmm. It definitely followed suit because people are closing businesses because of this, right? You start to see vacancies, and that starts this downward effect of tenants trying to renegotiate on the commercial side. And so I think it's different than the kind of the period we're moving into, because we're in no way in a housing crisis yet. COVID, I think, has exposed some of the future of the commercial markets.
Yeah, it's essentially in 2008, residential led commercial in essentially what had happened. So this time around, it's almost like it's a flip scenario where commercial was planned on having somewhat of a downward trend, but the health crisis just forced that even more and be more dramatic than. I mean, we haven't seen the full effects of it yet. It's going to be,
Well, that's not even to mention, you throw out the idea that what happens to big office buildings like this, mm-hmm. right? As you start to see more work from home. I mean, we've had multiple clients that have called us that were planning on expansion and are now contracting their office space, right? So what happens to those larger office space? Do they change use? Does the price?
They try to talk with landlords and see what they can do. If they can't do anything, I mean, the office statistics just came out a few days ago. And subleasing is up 200%. So just right there, people are trying to shrink their spaces, and within their lease term, they're trying to sublet some of their space. Mm-hmm. So their overhead is not as high. It's not affecting them as much.
Super interesting. But they're also they're busting at the seams in their house because they're now working from home. Two parents working from home, kids being homeschooled, right?
Yeah.
So it's interesting how these two things, they are correlated in a sense, yet not really, right?
Yeah.
I mean, it's the same issue that's kind of sparked this. I also think retail, I think it'll be really interesting to see what happens in the retail sector and how there's going to be some kind of transition there because restaurants are struggling. But again, it could affect, lease values and whatnot that may have been a little bit fluffed.
And on the commercial side, it's going to expose property owners that weren't well capitalized, that let's say they pulled some equity out and, their debt service is a little bit higher. Their debt to income ratio is a little bit skewed, so they're going to be at a little bit more of a risk in a downward trending market than others that can weather it. They're a little bit stronger.
Let me just put a final nail in the coffin on the residential side. I feel like fundamentally we're in a very strong market. A lot of people aren't saying that. Yep. Inventory is so stupid low, it's ridiculous. Like, I would even go to the extent to say that we have like negative inventory, because most of the stuff that's actually being counted as inventory has been on the market 300 days. It's overpriced. Mm-hmm. It's not selling for a reason. It's got a sinkhole in front. Roof's caving in, right? So to me, that's not a factor of our inventory. The inventory is things that come on the market today are getting sold with 12 offers tomorrow, And so to me, we have way more buyers in the market, buyers coming from outside of our market.
And usually you look at home builders, as the, because they're smart guys. They know when to phase in new buildings. And the construction starts on the residential side for home builders. They're lining up to get those houses built.
Yeah, and you say they're smart until the market has an issue, like in 2008.
Well, it's an
It's
an engine. It's a train. They keep going, and then.
But all our builders, I think you're very smart for what it's worth. So yeah, fundamentally, I feel like we're in a very strong place. I do think one of our pitfalls could be if we see an increase in rates, could negatively affect our home values for a little bit, but not significantly.
Well,
just because you're going to affect buying power of future buyers.
Yep.
But I don't know, interesting discussion.
Yeah, I appreciate it. Yeah.